Bienvenidos al tercer capítulo de esta semana de Perspectivas para 2021, en la que cada día contamos durante 5 minutos con un destacado miembro del equipo de inversiones de Fidelity. Hoy, Ellis, responsable de inversiones de renta fija, responderá a preguntas sobre la inflación, sus preferencias regionales, riesgos y sostenibilidad. 5 minutos para 4 cuestiones sobre 2021. Comenzamos.
La oferta monetaria ha crecido sustancialmente en respuesta a la pandemia, y la inflación de los precios de los activos podría trasladarse a los precios al consumo. Pero por otra parte, 2020 ha terminado con una severa recesión en prácticamente todas las economías, menos la China.
Yeah, I think we're heading into a reflationary environment in 2021. And the reason why I believe this is that there's been very powerful monetary and fiscal easing in 2020. So you look at the Fed's balance sheet, for example, it's been widened by $3 trillion this year. You've seen very rapid money supply growth in the US. M2 growth, for example, is running in excess of 25% year on year. It's just, it's really exploded. And as a result of that, and plus the sort of fiscal expansion that we're seeing as well this year and going into next year, I do think we're in a reflationary environment which is going to raise all risk assets into 2021.
La recuperación de la crisis está siendo desigual entre los distintos países, con Asia y particularmente China en clara ventaja frente a las economías de Europa y Estados Unidos. Asimismo, habrá divergencias entre las rentabilidades de los distintos tipos de activos de renta fija.
Well, I think in this reflationary backdrop that I'm talking about, which by the way, I think is going to be which is going to cause some dollar weakness into next year. Already we've seen the dollar trade weighted index down about 6% this year because of very loose monetary and fiscal easing. So against that backdrop and this very accommodative reflation backdrop, I think you have to go for more high yielding assets in 21. And I think the top of my shopping list for next year would be emerging market debt. And I think local currency debt probably stacks up even better than hard currency debt for 21, which is kind of a turnaround for the last few years. The reason being it's a weak dollar environment where you need that kind of yield, and I think emerging market debt stacks up extremely well when we start seeing that sort of sequential growth upturn when they see the vaccine having an impact on stabilizing growth. But I also think China high yield, Euro high yield, those kind of high yielding assets which will perform better in a reflationary environment. They're the kind of asset classes you need to go for in 21.
La máxima aplicable a la renta variable de que una mayor rentabilidad potencial conlleva un mayor riesgo es igualmente aplicable a la renta fija, por lo cual hay que realizar un análisis fundamental de cada bono en que se invierte, al igual que hacemos con las acciones.
Look, I think the biggest risk for next year has to be what I would call a yield curve tantrum. And what I mean by this is that, this is a reflation environment, which I think we're in. And that could cause some fairly substantial yield curve steepening of the treasury curve next year. And that could be caused by two different factors. The first thing is that inflation break-evens, which are currently, if you look at, for example, 10-year break-even inflation in the US, that's currently at 1.9%, but we could see break-even inflation begin to, continue to go higher from here. And secondly, real yields are at minus 90 basis points at the moment, and that's the thing that is keeping the plate spinning. We have to have extremely negative real yields for the amount of debt that's outstanding in the global economy to be debt serviced, and that needs to continue. But I do suspect that next year, we could actually see a slight marginal increase in real yields, and the combination of those two could cause steepening of the yield curve. And I think, as we saw in the fourth quarter of 2018, when the Fed were reducing the size of its balance sheet, we had a market dislocation because real yields were going higher then. And of course, who could forget the taper tantrum in 2013? Those kind of events where you see your risk-free rate going higher, that can cause some destabilization in credit markets. So for me, this is a time next year where you want to be rapidly reducing duration and going for things like short duration income strategies where there will be an income desire for next year, but just to keep your your duration a bit shorter than it should be.
Un amplio análisis de Fidelity sobre el comportamiento de 1.450 bonos corporativos durante los 9 primeros meses de 2020 demostró que las empresas con mejores calificaciones ESG pueden ofrecer un retorno mayor y más estable que las que carecen de ellas.
Yeah, absolutely. ESG is here to stay, and I think there's this is just not necessarily a moral issue, but I think there's a very strong fundamental case why ESG is going to be important, and we've seen it this year. For example, in the dislocation that we saw in March of this year during COVID, it's the credits which had higher ESG scores that actually outperformed. Better governance, social awareness, and so on. So those credits actually outperformed, and I think that's why ESG is so important. Is that it gives investors, I think, a better return profile over the longer term, that you see less dislocation in times of market turmoil like we've seen this year, but also you should get the upside as well from better governance, better social, better environmental impact, and so on.